Ever wondered how leverage tokens stack up against perpetual contracts for on-chain trading? In this video, we'll break down the top 3 advantages of leverage tokens over perps. Lower cost and fees, a streamlined experience, and liquidation protection. Let's jump in. Do you know what you're paying for leverage? It's probably more than you think. The true cost of on-chain leverage can be surprisingly hard to find and even harder to track. Leverage tokens cut through that black box with a transparent cost structure consisting of 2 parts. Fees charged by Index Coop. These are the straightforward fees, including mint and redeem, plus an annual streaming fee, which varies depending on product. Second, borrowing fees on Aave. This is the dynamic part. The cost of carry, essentially the interest you pay for borrowing, depends on how much borrowing demand there is on Aave v3 at any given moment. In contrast, perp traders face a variety of fees, the most notorious being funding rates. Think of funding rates as adjustable interest fees you pay to keep your position open. They can fluctuate wildly depending on market conditions. In periods of high demand, they can skyrocket. Take May 2024, for example. On-chain funding rates for a 3x ETH position spiked to over 260%, an absolutely eye-watering fee. Meanwhile, the cost of carry for ETH3X, the leverage token, topped out just above 40%, a whopping 6.5x cheaper than perps. This isn't a one-off either. Historically, leverage tokens tend to be way cheaper than perps. Perps and leverage tokens both charge variable fees in some form, but the cost of carry tied to Aave borrow demand is quite consistently lower and more stable than perps funding rates. And that's not all. Perps platforms have a number of fees beyond the funding rate, including borrowing fees, open and close fees, which, unlike Index Coop's fee, are often charged on the entire size of the open position, not just the initial amount you put in. Over time, these differences in costs and fees can make a real impact in what you take home at the end of a trade. Ever opened up a perp platform and thought, where do I even start? These platforms, while impressive, can overwhelm with complex charts and interfaces. Combine that with the need to manage collateral, monitor market conditions, and manually adjust positions, it's easy to see why perp trading can feel intimidating. Leverage tokens from Index Coop strip away that complexity. They simplify trading by letting you just choose a market direction and swap into the token that matches your thesis. After you purchase, the token automatically rebalances to maintain your leverage, which frees you up to focus on your overall strategy. This hands-off approach isn't just about convenience. It's about relieving real headaches that come with managing leverage. So, whether you're a seasoned trader looking to streamline your operations, or just a newcomer who's looking for a straightforward trading tool, you might find the simplicity of leverage tokens compelling. One of the biggest fears when trading with leverage is the dreaded liquidation. Imagine this. The market unexpectedly moves against your position, and suddenly you're hit with a margin call, or worse, your position is liquidated. It's not just a bad experience, it can wipe out your money in an instant. Managing this risk typically requires monitoring market conditions like a hawk. Enter built-in liquidation protection with leverage tokens. Here's how it works. Leverage tokens automatically adjust their leverage ratios to maintain a safe collateralization level. When the market moves against you, the token proactively rebalances itself, reducing leverage to protect you from sudden liquidation. This built-in mechanism continuously monitors and adjusts your position behind the scenes so you don't have to worry about margin calls or scrambling to add more collateral. The token does the heavy lifting, allowing you to benefit from leveraged exposure while minimizing the risk. Contrast this with traditional perp platforms where you're responsible for managing your collateral and margin requirements, and if the asset price drops significantly, you could be liquidated. You might be wondering, what about extreme market conditions? Well, in the event of a big market crash, leverage tokens have an additional safeguard known as the Ripcord function. Think of the Ripcord function as an emergency brake that can be pulled as a last line of defense during sudden market drops. If the leverage ratio moves dangerously outside its safe range, the Ripcord function can be activated to aggressively deleverage the position and protect it from liquidation. This function is publicly callable and incentivized with a 1 ETH reward, meaning that anyone can trigger it when necessary. Now, no system can completely eliminate risk. Liquidations are an edge case, but theoretically possible. Still, leverage tokens offer a level of protection and peace of mind that's hard to find with traditional trading platforms. Navigating the world of on-chain leverage doesn't have to be complicated. By automating complex processes and helping to manage risk, leverage tokens can get you out of the weeds and freed up to focus on your strategy. Try the Leverage Suite today at app.indexcoop.com/leverage. If you have any questions or experiences to share, feel free to leave a comment below or hop into the Index Co-op Discord. As always, none of this should be considered financial advice, and you should do your own research and come to your own conclusions regarding what's right for you. Be sure to read through all of our disclaimers at the end of this video. Thank you for watching.